Good morning. I'm Peter Milios from the Finance News Network. Stocks were mostly weaker on Wednesday as traders passed through a summary of the Federal Reserve's most recent meeting, looking for clues on the central bank's next move against inflation. The Dow Jones Industrial Average dropped 0.26%, the S&P 500 fell 0.16%, while the Nasdaq Composite rose 0.13%. Fed officials have noted that inflation data received over the past 3 months showed a welcome reduction in the monthly pace of price increases, but stressed that substantially more evidence of progress across a broader range of prices would be required to be confident that inflation was on a sustained downward path. There are mounting concerns that the Fed will continue hiking rates, and this spooked investors overnight and pushed stocks to their worst day of 2023. In company news, shares of Palo Alto Networks popped 12%, after the cybersecurity company lifted its earnings forecast for the year. Crypto exchange platform Coinbase topped revenue expectations, but shares fell 4%. Intel's shares declined over 2%, following the company's announcement of a more than 60% reduction in its quarterly dividend, aiming to create long-term value and financial flexibility during macroeconomic uncertainty subsequent to their previous year's fourth quarter earnings miss. And Tesla CEO Elon Musk and his team are meeting with California Governor Gavin Newsom to discuss job creation and expansion efforts in California, with a focus on hiring engineers skilled in research development and artificial intelligence for the company's new engineering headquarters. And in relation to the EV space, lithium prices in China have fallen by almost a third in the past 3 months due to weaker demand for electric vehicles. There are also concerns over the strength of the EV demand in China, reduced subsidies, and low household confidence, which have driven prices down by 29% from the highs in November. Overnight, the S&P 500 sectors closed mostly lower. Materials and consumer discretionary were the only two finished higher, while real estate was the biggest laggard. Now looking at Europe, investors are increasing bets on the ECB lifting rates to an all-time high. Investors are betting that the European Central Bank will raise interest rates due to the Eurozone's economy's resilience and signs of inflation being tougher to control than expected. Swap markets are pricing in a jump in the ECB's deposit rate to 3.75% by September, which would match the benchmark's 2001 peak. And Germany is planning a US-style tax credit system for renewable energy to counter Biden's IRA and reduce reliance on China green tech. Credits would provide incentives for solar, wind, and grid investments, but need approval from Brussels to be implemented. The SPY futures are pointing to a 0.3% fall. Thank you for listening.